Well, and they certainly impressed Wall Street. The stock trading up significantly after hours and throughout the earnings call. When you look at the numbers, the first thing you note is that not only are the revenues strong, but there has been a consistent acceleration of revenue growth. If you look at the rate at which revenues have grown, you can see that that is increasing with that acceleration of revenue growth, and that's very powerful for this company. Now, also important here, so not only is that growth rate picking up, again, revenues growing fast and faster, that's what you want to see in a growth stock. You also want to see this, you want to see profits, of course. What's interesting about the Google profits is the profits have improved amidst an aggressive plan for spending on growth. The company's talked about all the hiring they're going to do, all the investment they're going to do in Google Plus, in mobile and in their mobile platforms. So to see that 33% operating margin improvement over last quarter really surprised people on Wall Street and is good news for people who want good news from this company. Now, a number that I always look at when I'm looking at this company is paid click growth. That is, how many people are clicking on ads and how fast that's growing. And what you've seen from this company is it's really improved, and not only improving year over year, but the improvement's been really steady. You see 18%, 18%, 18% each of the last 3 quarters. That shows that they've got an advertising business that is really strong. But at the end of the day, all of business is about generating free cash flow. And in order to see free cash flow, what's really important is that you've got to, generate free cash flow after acquisitions. These guys have got free cash flow in the last quarter growing quite a bit over the previous year. It's an impressive creation of cash, but at the end of the day, that's what business is about. Emily?
Thanks, Cory. Well, joining us now, someone who says Google has a 1% chance of success with social, but maybe 5% with Google Plus. Gene Munster, he's a Bloomberg West, one of the most accurate technology analysts, and Piper Jaffray's managing director. He joins us now from Minneapolis. Also, Cory is staying with us as well. Now, Gene, first of all, I have to ask you about Google Plus. Google's share price did spike after it was released. 10 million users. Larry posting his earnings remarks there today. Why aren't you more optimistic about it?
I think because social's winner take all, and those have been some impressive numbers. As I said, the probability that they succeed has definitely gone up. But really, I think people at the end of the day are just going to stick to one social network that's going to have the most critical mass. And so, well, they have 10 million today, and ultimately they could get to 350 million. Based on just the number of Gmail users, it's still a long ways away from 750 million and growing at Facebook. And so the bottom line is this, the innovation that Google has will likely be incorporated in Facebook. And second is it's just all about critical mass. You want to be able to find your friends.
So I have been experimenting quite a bit with Google Plus, and I think a lot of the Google Plus fanboys are going to think you're raining on their parade. Couldn't you see Google Plus boosting the value of Google's other products rather than being just a social network?
Yeah, I mean, there's definitely going to be value in engagement in Google. They talked about on the conference call today, they want you to engage in Google products twice a day like you brush your teeth, and I think Google Plus is definitely going to do that. I think over the next couple years, or at least the next couple months, I think it's really going to be a novelty to check this out. It's clearly a good product. I don't want to take anything away from Google. It's more innovative than Facebook is, but Facebook has this massive amount of users, and I think that's the part. At the end of the day, the question is this: do people want 2 online identities or not? And I would tend to think they probably only want 1.
So if it's not Google Plus, what does Google need to do to boost its growth? Is it going to come from display or mobile advertising?
I think both of those definitely help out, but Google talks about their next billion-dollar business is search, just regular old search, and mobile's a big part of that, and that's the part that's most impressive. A lot of investors going into this thought this is the next Microsoft, basically a dog of a growth story, and tonight's results were impressive. This is a mature company that continues to have impressive growth. The reason is they're getting advertisers to pay more for each click, and that's something that just comes to ad quality improvements that they've been focusing on over the last 3 quarters, and it's paying off. So to answer your question, yes, YouTube and mobile is important, but ultimately these improvements in ad quality, basically they're making it easier for you to want to click on one of their ads, and that's when they get paid. That's the part that I think is really changing Google here tonight. That's the takeaway for me.
Hey, Gene, let me ask you about the numbers. When you look at them, what was the number that surprised you the most? I was most surprised in operating revenue or operating growth or margin growth. What about you?
For me, it was the cost per click, or also known as the revenue per click, what Google gets paid for each click, up 18%. The street was looking for up 8%. I mean, that was kind of an impressive jump on that front. And so I think that that just shows that advertisers are willing to pay more for each click. It shows how relevant Google is as an ad platform. And so that, to me, was the most important number.
Yeah, does that say something about the broader economy? At this point, Google's a very large advertiser, and advertisers don't pay more in a declining economy.
I think it does. I think the willingness, as you said, for advertisers to pay more, I think it is a good pulse. I think Google is a good real-time indicator in terms of the broader economy. Their business declined, obviously, in 2008, 2009 when things got tough, and I think this is a good sign. I feel good about broader advertising, that's for sure, after their results.
Morgan Stanley did just downgrade Google in part because they're spending more. They are hiring a lot of people. Gene, what are your long-term prospects for Google?
Well, I think you got to look at it in two phases. One over the next 1 to 2 years, and then 2 years and beyond. I think over the next 1 year, they're having these continued search improvements, which should be positive for the street numbers. I think, it's one idea to downgrade it when the stock is up. I see the logic behind that, but ultimately, the improvements in ad units that we saw tonight can continue for the next few quarters. And so I think that's a positive sign. Also, even though I'm a believer that ultimately Facebook is going to be the winner in social, I think just these continuing rising numbers with Google+, the numbers are going to go up. They haven't even started to push it. I think that's going to be positive for the stock, too. So I think the combination of those two are good for Google stock.
I think the question as well is, are those actually active Google+ users? Piper Jaffray's Gene Munster, thank you so much for joining us from Minneapolis.
Thank you.